Hello and welcome to Big Deal and wish you all a fabulous new year. Let's today take stock of the lessons from the year gone by and what it really means for the top Deal Street trends for this particular year. Let me welcome on the show Cyril Shroff and Prashant Mehra to discuss exactly this. Welcome, gentlemen, to CNBC-TV18 and wish you both a very, very happy new year and a year full of deal making as well. Cyril Shroff, let's begin by your view on how we have really started in 2023. Most of the macro headwinds still remain with us, and that has given a lot of opportunity and also disrupted many business models in the last year. Lessons from that last year, and how are you seeing the big factors which are going to really impact the deal street for this year?
So thanks for that, Nisha, and Happy New Year to you as well. Many of the major themes of 2022 will flow into 2023 as well. So globally, of course, there is a lot of uncertainty arising out of the Ukraine war, inflation, possibility of recession in three major regions of the world, including US, Europe, and China. So those are the global headwinds. But equally, we saw in 2022 that India remained a little bit of an oasis in all of this and was able to buck some of the global trends. So I think that phenomenon will continue to play out in India as well. And there are many reasons for this as well. So we saw last year on Deal Street, it was a very active year for M&A, which came in all shapes and sizes, whether it was large internal restructurings, or really acquiring new businesses, consolidation, so on and so forth. And we'll talk about it a bit more later in the show as well. But I think 2023 is also going to continue to be quite a busy year for M&A activity. Similar trends will continue. There would be sector-related nuances, which we will talk about. So I don't expect 2023 to be any worse than 2022. It will continue to be an active year, and it can even surpass our expectations, depending upon how some of the major macro trends, and it's basically the macro trends, I think, which will drive a lot of this activity, including geopolitics, I think, will be probably the biggest theme of all.
That's right. But Cyril Shroff, one more question on what you said. Can you pinpoint one important change or a factor which happened in 2022, which will have a lasting impact on the deal street, especially in this particular year? Like COVID was one which led to a lot of digital revolution. Anything from 2022 which is going to be making a marked difference?
So I would say two things. I think, at least speaking from an Indian point of view, the reduction of the twin balance sheet problem. I think the NPA problem in the banking system, the NPA situation is amongst its lowest in the last 10 years. And corporate balance sheets have been largely deleveraged, and corporates are kind of hungry for more. I think because of this and because of the opportunities, I think CEO confidence will remain high. And major corporates are in a very acquisitive mode as well. So this would be, I mean, there are many factors. This is the one I think is going to play an important role in Deal Street.
Right. So major corporates are in very acquisitive mode. This would be my biggest takeaway from whatever you have mentioned, Cyril Shroff. So Prashant Mehra, that should give us a lot of confidence on the deal street for this particular year. You are the author of a detailed report, which we are revealing now, the findings of that on the deal street in the last year and the future outlook for this particular year. $127 billion worth of deals, and in volumes it ramped up. It went up by 47%, but in terms of value, value it was higher, but in volumes it was lower. And I would say it was one particular merger which really pushed up the number. How would you ascertain the last year, and do you think that this year will be a beat of the last year?
Jeff, thank you for having me, and Happy New Year to both of you. I think as far as 2022 is concerned, it's been a year full of revelations. we can conveniently break the year down into H1 and H2, as we like to call it in the report. And if you look at H1, it's been a record number of years, record number of deals, whichever way you look at it, whether it's value or volume. 80% of the work on deals really happened in the H1 of this year, whether you look at it from a M&A perspective or a private equity perspective. The last 6 months have been more of a wait and watch across sectors, across various mediums of deal making, whether it's IPO, whether it is M&A, private equity, or cross-border. So clearly, the last 6 months have been extremely subtle. I think now we will probably see the trend reversing, where we will see about, according to me, 5 elements of new deal making emerging in the first 6 months of 2023. A few themes that I believe will be very strong. First is consolidation. Balance sheets are strong. Corporates have been conserving cash for the last 6 months, and now they will go in for those consolidations. Could be actually forward integration, backward integration, even left and right integration for that matter. Private equities will focus on funding these consolidations as well, because that's always looked at as an alternate means of financing. Distressed asset M&A should be something to watch out for, both from a global as well as India perspective. I think cross-border, which has been extremely subdued in the last year or so, will again come back. And I think finally, from a sector perspective, while tech-enabled sector will continue to be the most popular deal-making sector, but I think a new sector may also emerge with increased consciousness, especially post-COVID, which is ESG. I think a bunch of all these factors, with India continuing to demonstrate extremely strong macroeconomic factors, will bring a pleasant 2023. And as Mr. Shroff also mentioned, 2023 should possibly be much higher. We may see less number of, as in lower valuations, but in terms of volume is concerned, I think we'll probably surpass 2022 as well.
Right. So very, very interesting, those trends that you mentioned, actually, Prashant. Cyril Shroff, Prashant mentioned one interesting bit, new emergence of a sector, which the market always looks out for, and the first movers get that advantage. And I know a lot of pockets have been working on the ESG theme. It came to a little bit of a slow lane because of the various macro headwinds that we were faced with in the last year. How do you see this developing? And I also want to raise it in the context of sustainability, because the government's green hydrogen mission is also now getting revealed, and that will also open up many possibilities, like some of the corporates did in solar and other forms of renewable energy in the last few years.
So ESG was a big theme even in 2022, and some of the largest deals had underlying them ESG considerations. And I think that will get stronger and more obvious in 2023. So what it would mean, for example, in renewable space, or broadly in sort of more sustainable energy spaces linked with the energy transition. So I think you will see a lot of volume in that. Again, it's broadly linked with ESG, but even in a non-obvious way in many sectors. For example, in real estate, there will be ESG considerations in terms of who wants to sell and who wants to buy. So there will be obvious or non-obvious ESG considerations both on the buy and the sell side. It is now mainstream in terms of corporate strategy and thinking, so it will manifest itself. So there will be certain obvious types like renewable energy, and I think it will, in any event, it will underlie a lot of deal-making activity, including a lot of foreign investment, which will be in furtherance of expanding their sustainability goals. You'll see that coming in as well.
Right, and a lot of sustainability-driven funds have also emerged in the last couple of years as well. Prashant, Mehra, this particular time is also going to be very challenging for companies which do not have deep pockets, because a lot of foreign money has become expensive, so they'll be very choiced in picking their investment destination. Private equity also feels that we will do cherry picking because now valuations are going through their own right now, the process where there is enough volatility for the dust to settle. And on the other hand, loans are getting more expensive. What are the forms of fundraising activity are you anticipating for this particular year? And also, is IPO appetite there?
As far as IPO appetite is concerned, I think we will need to wait and watch a bit. I think IPO activity should hopefully pick up in the next quarter, or possibly towards the financial year end for India. As far as means of funding is concerned, debt cost is increasing, but at the same time, the gap between debt and equity is reducing. So from that perspective, as I mentioned, for consolidations, private equity will be looked at as a very important element of funding, since acquisition financing is not allowed in this country.
Yes.
Foreign money should also play. I mean, whenever there is a recession, it frankly means that there is a recession for a particular economy, but there is money always available. I think a lot of money will get diverted towards India. And that should become the means of financing for a lot of companies, again, in the form of consolidation. Private equities, IPOs, as well as cross-border foreign money coming into India will probably be the three biggest bets. And as I mentioned earlier, since distressed M&A is also something
Yes.
that will become attractive, funds which specifically fund such transactions will also find a lot of appetite.
Right. Cyril Shroff, you've done so much work on the distress side, and Prashant mentioned that. How soon before we see the resurgence and importance of IBC come back, in your view, especially with corporate finance becoming a little bit of a constraint because of interest rate rising?
So we're already seeing this. IBC, I think, is slowly coming back. There are a variety of reasons. One is on the kind of buy side, there is increased appetite, and there are more targets that are coming up for resolution as well. So it's an existing theme. What we need to watch out for and look forward to actually is how the process gets streamlined and becomes more efficient. The biggest problem with IBC-related resolution, including buyouts, has been the sheer inefficiency of the process. So, but I'm seeing the early signs of very conscious thinking on restructuring of the process, simplification, and the policymakers are working hard at it. So, in a nutshell, I think the IBC theme is very much back.
All right, so IBC to watch out for, but there are many, many more themes that are going to develop on the deal street for the year 2023. We'll pick on those when we return after a very short break on Big Deal. Stay tuned.